As we stand on the brink of a historic financial confrontation, the global markets tremble. Japan's recent cutback on its holdings of U.S. Treasury bonds has sent shockwaves through Washington. Why has Tokyo made this bold move? Amid escalating trade tensions, especially concerning electric vehicles and new tariffs on Japanese auto exports, the anxiety is palpable. Are we witnessing the early signs of an impending recession? A national leader warns of a market weary of the constant seesaw of trade policies. Investors are left wondering, how low is too low for the Dow Jones? March 1, 2025, marked a pivotal moment as Japan openly signaled its intent to reduce its investment in U.S. bonds, drawing a fierce reaction from U.S. officials. The Treasury Secretary underscored the importance of trust among allies, warning Japan against actions that might destabilize the dollar. But what does Japan truly seek? Is this merely a strategy for leverage, or could it disrupt the U.S. economy profoundly? Behind this complex chess game lies Japan's long-standing role as a major player in financing American debt, accumulating billions in treasury bonds. Yet the recent discussions in Tokyo suggest a possible shift, one that could threaten the dollar's dominance. Japan's finance ministers have hinted that if U.S. protectionism persists, they might reconsider their bond portfolio. What could this mean for the global financial landscape? The stakes are incredibly high. Japan, a leader in electric vehicle technology, sees itself under pressure from U.S. tariffs designed to protect domestic producers. The question arises, why should Japanese companies carry the weight of U.S. policies, especially when they're essential players in the green economy? Tensions escalate further as Japan issues a stark message: unilateral sanctions may force them to rethink their financial strategies. The potential fallout of Japan's bond sales looms large, and experts warn of volatility that could ripple through global markets. Will such a move imperil the dollar's status as the world's primary reserve currency? With hundreds of billions still held in U.S. bonds, any significant sell-off could send shockwaves through financial systems. Is this merely a tactical maneuver to gain an upper hand in negotiations, or could it spark a revolutionary shift in economic alliances across Asia? As the chips fall on this high-stakes table, both nations understand that diplomatic relations hinge on economic interplay. With Japan's actions under scrutiny not just from Washington but globally, the possibility of an unforeseen economic front arises. The world watches, breath held, as the outcomes of these moves could redefine international relations and trade dynamics forever. Will Washington cede to Japan's demands, or will it double down, risking greater fallout? Only time will tell as the drama unfolds, leaving the fate of global markets hanging in the balance. In the ever-evolving chess game of global finance, Japan has made a bold move that could shake the foundations of the dollar. As one of the largest foreign holders of U.S. Treasury bonds, Tokyo has amassed a staggering fortune over the years, thus becoming a key player in America's public debt financing. Recently, however, whispers of a potential operation to weaken the dollar have emerged from Japan. What's behind this audacious strategy? For years, Japan maintained rigorous foreign exchange interventions to keep its currency competitive. The Bank of Japan traditionally managed the value of the yen, yet these interventions have been limited to avoid retaliation from Washington. However, with the backdrop of soaring tariffs on electric vehicles and criticism regarding unfair competition from Japanese automakers, Tokyo seems poised for a drastic shift. Behind closed doors, discussions have taken place about reviewing the bonds held in the United States if protectionist measures persist. In response, the Secretary of the U.S. Treasury issued a stern message, emphasizing that trust among allies is crucial. The stakes have never been higher, as Japan stands as one of the few major economies capable of posing a serious threat to the dollar's dominance. Headlines across America now declare that Japan is pulling the dollar's reins, underscoring the strategic importance of electric vehicles in this volatile equation. The battle isn't just in the boardroom, it's happening on the streets. Japan, known for engineering marvels like Toyota, Nissan, and Honda, is pivotal in the global shift toward electric mobility. Yet, as the U.S. government ramps up domestic electric vehicle production, it retaliates with tariffs against Japan's competitive offerings. This begs the question, why should Japan shoulder the financial burden for American protectionism? As Japan's finance minister has made it clear, if unilateral sanctions cloud economic interests, Tokyo is prepared to wield its economic clout. The potential gains from offloading U.S. Treasury bonds loom large, but the risks are equally significant. Markets could swing wildly, and an increase in the yen's value may lead to more economic challenges for Japan. What's next in this gripping saga? With rising tensions, will Japan's gambit tip the scales against the dollar? As we delve deeper into the intricate relationships between trade, politics, and finance, the ripple effects could change the global landscape forever. In an unfolding drama that could shake the very foundations of the global economy, Japan's finance minister has sent a bold message to Washington. Unilateral sanctions could push Tokyo to explore alternative economic tactics. As the U.S. grapples with its own pressing issues, Japan stands at a crossroads, contemplating a massive sale of U.S. Treasury bonds. Will this move turn the tide in favor of Japan, or will it backfire on their own economy? Economists warn that a significant bond sale could lead to wild fluctuations in the markets, potentially driving the value of the Japanese yen sky high. Meanwhile, the U.S. has tightened its grip on trade policies, reminiscent of the previous administration, raising tariffs as a fortress to protect local industries. However, this defensive stance against electric vehicles has ignited frustration among Japanese automakers. With major brands like Toyota and Nissan becoming cornerstones of innovation, American producers find themselves outpaced on the global stage. Could this crucible turn into Japan's financial weapon, aimed directly at the heart of the dollar's dominance? Financial strategists speculate that even a small portion of Japan's vast holdings in U.S. bonds could disrupt market confidence and raise troubling questions about the dollar's status as the preeminent global reserve currency. In a closed-door meeting, the governor of the Bank of Japan hinted at Tokyo's willingness to act, stating, "We will not leave our hand weak." As tensions swirl in the international arena, questions about whether this move is merely a power play or a desperate attempt to survive arise. The stakes are extraordinarily high, and Japan is poised to make its next dangerous move. The response from Washington has been cutting. Officials stress the importance of trust between allies, hinting that any abrupt financial strategies could be perilous. Yet, as Asia's giants, including China and South Korea, watch closely, questions linger. How far will Japan go to assert its economic independence? Could this brewing conflict lead to a new economic front in the region? The pressure is mounting, and the fate of the dollar hangs precariously in the balance as both nations prepare for a showdown. As the world watches, a gripping story unfolds in the heart of the global economy. Tensions are rising between the United States and Japan, each maneuvering for dominance in an intricate game of finance and trade. Japan's recent decision to reduce its holdings of U.S. Treasury bonds is sending ripples across Washington, where alarm bells are ringing over the escalating trade war, particularly over electric vehicles and new tariffs on Japanese automakers. Could this bold move signal a more profound shift in the balance of power? As the tension escalates, Donald Trump has played a surprising role. He seems to have the upper hand, with countries like Canada backing down in economic confrontations. Are we on the brink of a recession? Some say it is inevitable, as current trade policies are stretching the market thin. The Dow Jones has plunged for the second consecutive day. Imagine the sheer anxiety that investors feel. Could this downward spiral be the beginning of something catastrophic? Japan's finance ministry, in a startling announcement, confirmed, "We may reconsider our U.S. bond holdings." This statement came with sharp scrutiny from Washington, where officials worry about the implications of Japan's financial strategies on the stability of the dollar. What does Japan truly gain from this upheaval? As the world's third-largest economy targets its investments, it may also be aiming to assert new bargaining power in a climate of rising tariffs against its automotive industry. But how exactly does this play out in the grand chessboard of global finance? With Japan at the crossroads. Some argue a strong currency is essential, yet the overwhelming concern is the potential impact on its economy. The stakes are high, and Tokyo's actions come amid whispers of a possible new economic front in Asia. Closer scrutiny by regional giants like China and South Korea fuels speculation that perhaps Japan's boldness could be a game-changer. Would this position challenge U.S. dominance or merely uphold traditional hierarchies? The financial heartbeat of Japan's economy, the yen, has been faltering against the dollar. Historically, low interest rates have contributed to this depreciation, raising questions about Japan's foreign investment strategies. As the dollar-para-yen ratio rises alarmingly, upward of 15% in the past 5 years, Japan's response becomes critical. What happens if the yen continues to slip? Increased import costs could spark inflation, leading to chaos. The battle is more than just economic, with geopolitics hanging in the balance. Will ongoing diplomatic ties withstand the pressure applied by trade disputes? As trade remains a vital thread in the fabric of military and diplomatic relations, the ripples of this financial tension could cause unforeseen repercussions. Amidst this turmoil, the U.S. administration grapples with choices. Should they prioritize safeguarding domestic interests over vital alliances? If concessions are made to appease Japan, could it be seen as a significant diplomatic failure? Or do they tread carefully, fearing the implications of pushing this longtime ally to the brink? As the narrative unfolds, both nations tread on a finely woven tapestry of finance and diplomacy, where every thread could either bind or sever their long-standing alliance. What will be the ultimate outcome of this confrontation, and who will emerge as the true victor in this high-stakes economic showdown? The answers lie just beyond the horizon. In the backdrop of a shifting global economy, Japan's decision to reduce its holdings of United States Treasury bonds has ignited concerns within Washington. This move, seen as a response to escalating trade tensions and new tariffs affecting the Japanese auto industry, prompts a critical question: how will Japan's financial maneuvers impact the global market? As the sunlight streamed through the bustling streets of Tokyo, a sense of urgency filled the air. The sweet scent of cherry blossoms drifted through the city, masking an impending storm of economic upheaval. A whisper of change was palpable. Japan has long been a pillar in financing American public debt, accumulating significant treasury bonds. But now, the landscape is shifting. Could this bold strategy undermine the dollar's supremacy? This year has seen the dollar's value against the yen rise alarmingly, from 100 yen equating to $0.93 in 2020 down to $0.85 by 2025. Gasps echoed around trading floors as analysts scrutinized these figures, predicting a possible recession at the very tip of tumultuous waters. Worries about inflation and rising import costs hang heavy over Japan, with interest rates on 10-year U.S. bonds surpassing 4.3% by late 2023. Each tick upward felt like a tightening noose around Japan's economic prospects, forcing the nation to rethink its bond investments. Yet, as Japan grapples with a potential financial crisis, will its actions strain the long-standing alliance with the United States? The tension surrounding electric vehicles, once a source of pride for both nations, has now become a pressure cooker for their diplomatic relations. Can trust withstand trade disputes that ripple through defense channels? Waves of uncertainty have washed over both countries. The urgency of the U.S. Treasury Secretary's remarks underscores a crucial point: trust between allies is vital. However, with economic interests at stake, one must ponder if a dialogue will be strong enough to quell the brewing tempests. As Japan navigates these treacherous waters, the stakes couldn't be higher. Will its tactical maneuvers prove to be a gambit for greater bargaining power, or unwittingly cause a stir that shakes the foundations of the global economy? On this precarious path hangs the fate of countless investments, trade relationships, and national securities. Tensions are rising in global markets as Japan's recent move to cut its holdings in U.S. Treasury bonds stirs worry in Washington. What happens when a key ally starts to flex its financial muscle? In the wake of escalating trade disputes, especially surrounding electric vehicles, Japan's decision might be a strategic play to strengthen its bargaining position. Can this shift truly shake the foundations of the U.S. economy, or is it merely a calculated effort by Tokyo to enhance its negotiating power? Let's delve into the heart of this unfolding economic drama. In a statement on March 1, 2025, Japan's finance ministry hinted at a potential exit from U.S. bonds, igniting a flurry of reactions in Washington. The U.S. Treasury Secretary stressed the importance of trust between allies, suggesting that straining ties over economic disagreements could backfire. Amid rising concerns, many are left to wonder, how will these financial maneuvers impact the global financial system? Japan, as one of the largest foreign holders of U.S. debt, begins to appear as a pivotal player on this chessboard. Despite Japan's significant investments in U.S. bonds over the years, it faces mounting pressure from rising import costs tied to the weak yen and tariffs on its automobile exports. The stakes are high, with many questioning if Japan might leverage its bond sales as a strategic weapon against the mounting U.S. tariffs on electric vehicles, a sector where it holds considerable expertise and technology. What will happen if Japan successfully uses this financial leverage to secure a more favorable trade deal? The Japanese automotive industry is pushing for government backing to elevate its position in the electric vehicle sector. With leading brands like Toyota, Nissan, and Honda making strides in innovation, the competition is heating up. Yet, the U.S. responds with protective policies that some Japanese officials claim could create an uneven playing field. Will this tit-for-tat lead to a breakthrough in negotiations, or deepen the rift between these economic giants? The repercussions of Japan's financial strategies could resonate far beyond their borders. Observers note that if Japan were to sell a portion of its massive stock of U.S. bonds, it could trigger instabilities in the markets and shake the perceived reliability of the dollar as the world's leading reserve currency. Is this a close examination of economic strategy, or did Japan just wade into dangerous waters? As Washington contemplates its next steps, it finds itself at a crossroads. Tensions over tariffs could unravel the historical security partnership. However, with both nations recognizing the risks associated with a potential economy tailspin, will they opt for dialogue and cooperation, or will pride and politics dictate a more confrontational path? The coming weeks might just reveal who's really holding the cards in this unpredictable political game. In a world where the winds of trade can change direction with a single decision, a brewing conflict could reshape global economics. Recent developments have seen Japan reducing its holdings in U.S. Treasury bonds, throwing Washington into a state of unease. This move is especially critical amidst rising tensions over the electric vehicle industry, as new tariffs threaten to escalate the trade war between these two economic titans. What's at stake in this high-stakes financial chess game, and can Japan leverage its assets to gain an advantage? As the Japanese government navigates these turbulent waters, they've made it clear, support is needed. The president of the Japanese Automobile Manufacturers Association proclaimed their need for governmental backup to counter the U.S. trade barriers. This isn't just a casual conversation, it signals a potential strategic shift in how Japan views its relationship with the U.S. Amidst whispers from the Japanese press, there's a growing sentiment that Washington may need to relent, or risk losing its grip on the financial power it wields. Caught in the crossfire, American senators have noticed a shift in Japan's demeanor. Japan appears more like a rival than a partner, which raises alarms regarding economic security in the U.S. This rhetoric indicates an escalating tension between the two nations. However, the stakes are equally critical for Japan. The bond between these economies is fragile. If the U.S. loses Japan as a significant bond buyer, the ripple effects could mean soaring interest rates and inflation, dragging the country closer to a recession. Both nations understand the stakes involved, yet neither is poised to back down. The U.S. seems intent on protecting its domestic market while Japan advocates fiercely for its innovation and global standing. With each nation playing its hand, everyone is left to ponder, how much of its vast bond holdings is Japan willing to sell, and how severe will the repercussions be for the U.S.? The implications of this tumultuous trade relationship extend far beyond tariffs and bonds. As Japan contemplates further financial maneuvers, one thing is certain, the world will be watching closely. Will this game of financial brinkmanship escalate, or can cooler heads prevail to restore some semblance of stability in international markets? The clock is ticking, and the next move will determine the course of economic relations for years to come. In the intricate dance of global economics, Japan's recent strategic maneuver has sent shockwaves through the financial world. With whispers of significant bond sales on the horizon, the question on everyone's lips is, how will the United States react? The potential unloading of a sizable bond package, rumored to start with a modest sum of $10 billion, hints at an intriguing showdown between two of the largest economies. As the tension builds, the stakes grow ever higher. If the White House maintains its protective tariffs on electric vehicles, Japan may release even more bonds, pushing the fragile market into uncharted waters. But what happens next? Experts warn that such a rapid bond sale could backfire on Japan, risking the stability of its own economy while seeking leverage against the U.S. Think about this. Could the very weapon Japan wields to negotiate end up causing it more harm than good? In a world increasingly defined by trade tensions, Japan's tactical shift may mark the beginning of a monumental redefining of our economic landscape. The day may soon arrive when countries around the globe follow suit, following the trail blazed by Japan. With Russia gradually distancing itself from American bonds and China intermittently downsizing its own portfolio, the momentum is unsettling. Could we witness a seismic shift in the dollar's dominance? This is not just about economics. The very essence of international relations hangs in the balance. Electric vehicles and tariffs have the potential to catalyze a broader transformation, thrusting major players like Europe and China into the mix. If Japan manages to navigate this turmoil successfully, will other Asian nations see an opportunity to leverage their influence as well? The implications are staggering, yet the paths these powerful players might choose remain shrouded in uncertainty, promising a future filled with both risk and opportunity. Will the U.S. find a way to ease tensions and stabilize the situation? As discussions turn from economic indicators to the geopolitical landscape, this unfolding drama prompts us to consider, what could be lost if the trade winds shift entirely? With the balance of power teetering on a knife's edge, all eyes are on a new economic chapter that may begin with Japan's bold gamble, and the world will be watching closely as it unfolds. As tensions simmer between the United States and Japan, the stakes are rising with potential fallout from economic decisions. Japan's recent movements indicate a strategic pivot in response to U.S. trade policies, particularly regarding electric vehicles, EVs. While the American administration is determined to bolster its auto industry through tariffs, Japan is poised to leverage its significant holdings in U.S. Treasury bonds to assert its position in these negotiations. Could Japan's financial strategy trigger a seismic shift in global markets? Experts speculate that this might be a pivotal moment. For years, Japan has been a formidable player among foreign investors in U.S. bonds, but recent trade disputes could catalyze unprecedented changes. If Japan decides to unload a portion of its immense treasury bond portfolio, it could invoke unpredictable waves that destabilize the dollar. This decision might be seen as a financial weapon against restrictive U.S. tariffs on Japanese automakers. The backdrop of this scenario reveals a fragile but resilient bond between these two economic powerhouses. Japan's finance minister has expressed unease over the current trajectory of U.S. protectionism, asserting that such approaches risk their mutual benefits. Yet, as Japan contemplates its next move, the global watchful eyes of Europe and emerging markets are closely observing. Countries like Germany and France, equally competitive in the electric vehicle arena but lacking the leverage to sell U.S. bonds, might adopt different diplomatic tactics. If Japan's strategy to challenge the dollar succeeds, European Union countries might need to reconsider their own approaches to trade with the U.S. Moreover, a decline in the dollar's strength could reverberate through emerging economies, affecting currencies like the Turkish lira, Brazilian real, and Indian rupee, which are already vulnerable to fluctuations. As these dynamics unfold, the question looms, will Japan's actions spark merely a strategic negotiation, or are we witnessing the dawn of a financial battle that could reshape the economic landscape? And now, as seen in the geopolitical chess game, could the world's reliance on the dollar be challenged in ways never before imagined? What happens next could change everything. Don't turn away.